All right, welcome to the show, Contractor Talk with Richie Kidwell, building damage experts. Every week we have a new show for you, and we're very thankful to be on our live podcast, not only on Facebook every Tuesday night, but we take the show and we part it over to our audio content places, wherever you stream, from Spotify, iTunes, anywhere online, and then our YouTube page, you'll see our video that we have full video content for you in podcast form, all labeled, ready for you on different topics here on Contractor Talk with Richie Kidwell. Many different topics spanning from what's going on in the laws today in the state of Florida that impact our property insurance laws, contracts, and as contractors work with homeowners here in the state of Florida to put them back to a pre-loss condition. And so we talk about insurance claims processes a lot here. Last week we talked about helping roofing canvassers talk with homeowners and having homeowners understand what those guys are talking about, how they can help, and just really connecting some dots there. And talking with contractors here. We've had drywall guys, AC folks, CertPro people.
Yeah, home inspectors.
Yeah, and
plumbers.
All from their perspective on how they're helping homeowners today and helping put them back to a pre-loss condition. I'm your host, Richie Kidwell, and we have attorney Hans Kennon with Kennon Law Group. How you doing, man?
Oh, very good. Good to be back. What do I always like to say? Where are we? Like year 3 or 4? Or I mean, it's been a long time.
They run together.
They do. It's been great.
Yeah, and I like this format. Prior to, we were on the weekend show. It was great. A 2-hour show we have on the weekends. We were an hour show years before that on Florida Man Radio, and then we went over to iHeartRadio, where it was a 2-hour fold. So you'll see on some of our prior audio shows, you'll see they're hour 20 minutes. That's because we would have every 10 minutes we would take a break for commercials. So we did, so many of those. So here we are with 120 minutes of content. Now we're just a plain, just a plain old podcast show.
Plain old wonderful.
That's it. So we run our own format. We can go short or as long as we want, and put out the content that you want to listen to. So any prior shows, any topics that you want to go back to, you can search it on Spotify, or you can go to our YouTube page and search us there for our video content, as well as our audio content. And of course, we have our own Facebook page, contractortalkpodcast.com. It's got everything you need to know and hear there on that website. So there we go. So today's topic we're going to talk about, and we're going to get right into it. I have to shop for my personal insurance, our property insurance, and the rates are all through the roof, but I feel like I'm getting less and less coverage for a higher premium. It really is disappointing. And I was bragging last time, and Hans was like, man, I got a 100% increase on my insurance. And so we had to reshop it. And I'm like, I only got like a 2 or 3% raise from Heritage, and I'm doing good. And then I just saw another renewal coming up, and I look at it, and there wasn't a big money raise. It was still a couple $100 for the year, but it's still in the $5,000 for the year range. And I'm like, okay, all right, not bad. And I'm like, wait, can't be that easy. Let me go look in the policy and see if they changed any of my coverages for this new policy. So I started looking through the exemptions, through the deck page, and start seeing what I have and what I don't have, what exclusions exist. Remember, we talked in one show, we talked about exclusions, limitations that could allow for less coverage for the same amount, if not higher. So what I ended up finding is that they changed it to where I have now $5,000 total coverage in sewer backup.
Ooh.
So sewer backup, I only get $5,000.
And if that goes bad, man, that's $5,000. Don't take it very far.
That's a lot of poo-poo.
It is.
For a little bit amount of money. So whoever came up with that $5,000 figure to clean your house from poo-poo is I want to talk to them.
Right. No, I agree.
They're in deep water. They're in poo-poo. But then the next thing I looked at, and I was like, wait a minute. Okay, so that exclusion or limitation exists, because remember, there's an exclusion. Say we will not cover blah, and then they just don't cover it all. That's your exclusions.
Right.
You have your limitations. It says we will cover these perils, these damages, but only up to a certain amount. So now starting getting limitations, $5,000 on sewer, They limited me to $10,000 on water damage.
Oh, LWD, the limited water endorsement, limited water damage endorsement. Yes.
So I'm like, so any water damage? Can you define water damage?
And even 10,000 now includes tear out and all the other services, which it didn't before because we won some cases on that.
Yeah.
Yeah.
So you're at 10,000 to include everything you got to rip out that's damaged by water. I don't know if that covers the putback of that damaged material.
Booyah.
And then I have $10,000 cap on mold. So in my head, I said, if I have water damage that creates mold and it's from a sewer backup, I mean, I'm really screwed. But if it's from another peril outside of my sewer backup, like say I got water damage from a pressurized plumbing line, I come home from a long weekend, open the door, and there's water everywhere. You're telling me I've got $10,000 to cover that, not $500,000 like coverage A tells me I have?
Well, we talked about it before. Whenever consumers typically look at the front of their insurance policy, all they see is big numbers. All right, you got A is the dwelling, B is other structures, C is personal property, D is additional living expenses. So A is normally your home, and that's the biggest number. So you go, oh, good. I got up to that in case I got a problem.
You were in good hands.
And you're in good hands, or you got a piece of the rock, or you're like a good neighbor
right.
all those things.
You're covered.
But what we see is that coverage A is really only catastrophic coverage. Really, the coverage A number is really if the house burns to the ground or is literally leveled by wind. You never see those kind of numbers.
It's crazy. And so I'm looking at this and saying, okay, well, wait. Pressurized water line breakage is up there on possible causes
relatively
of damage.
Common at times, yes.
Right, and I'm thinking, all right, if there's an issue in the plumbing system in whatever way from the city, I don't have a septic, thank goodness, so that won't back up. But there are times where the city sewer backups occur. So you're telling me I got $5,000 coverage and that's it. And then I say I only have, and I was telling you I only have $10,000 in water damage.
And one thing real quick,
crazy.
keep in mind on sewage backup for the $5,000 of coverage you do have. Typically, what's going to happen that clause will be defined as sewer backup that is caused by your property, not off your property. So in the event that the city's line backs up, heading toward the lift station, if you're in one of the lower parts of that line or last on the line. If that lift station builds up and starts putting sewage into your home, that's actually, you don't even get the $5,000. That's excluded because it is a backup emanating from off your property. Then you got to go against the city or the county, whatever it may be. Actually, I just signed up a case like that recently just to help a guy out. Actually,
is there suing damages that would cover that?
So it would, well, not under the policy. The policy still is limited to the $5,000.
Oh, wow.
As far as that goes, and whether it depends on how they define it, that may include additional living expenses. It can include a lot of things. But you have to keep in mind, if the backup is caused by your kid, put too much toilet paper down the toilet, at least you're covered for whatever that number is going to be. But if the lift station for the county, who has people on it 24 hours a day, has some failure and that backs up sewage into your home, that will typically be not covered at all under the policy.
Wow, because that occurred off-site.
Off-site. Mm-hmm.
Right.
Yes.
It's that whole thing about a neighbor's tree fell on your house.
And what's interesting, too, about that is in that situation, your insurer really has an obligation of payment for that typically across the board. What's interesting is if you don't have the right coverage or don't have coverage and someone's tree falls on your home. I always want to say, if tree falls, does anyone hear it? Always it just sticks in my head.
The insured heard it.
The insured heard it when it came across the guy's fence and crushed his house. But in order for your neighbor's interest, I think it's interesting because I find this stuff interesting. Although whatever genetic defect it is, that makes me think it's actually interesting. To others, my wife sometimes will go, "That's not interesting." I'm like, no, it's fascinating.
Right. I don't think it makes a sound either. So,
yeah, I don't think it does. But if your neighbor's tree falls on your house and you're like, I want him to pay, his insurance company to pay, unless you can demonstrate that the tree was in a state of disease. Or was dead, your neighbor's insurer actually doesn't owe any money on the claim because the owner was not negligent because he had no reason to believe that the tree was otherwise diseased or dead.
What if it was just simply hanging over the fence? Right. And then they could have said, hey, listen, you have to cut your tree back so it doesn't come in my yard, but now it's in his yard.
Right.
So
now if a tree comes into your yard, it's crazy old common law stuff from England. if the tree's branches are in your yard, you're allowed to cut them back yourself if they hang into your property. But by doing so, you can't kill the tree by your conduct, even though it's hanging onto your property. It's a kind of crazy thing.
But let's say you decide not to cut the tree, and it's on your property, but it's your neighbor's tree, rooted. But then a wind event comes by, that tree branch falls on your house, and you didn't cut it back. They weren't negligent, but I mean,
obviously, as I like to tell everyone on the show, there's two things you can say. They teach you in law school. I don't know, and it depends. Now, if a branch breaks off, though, still on a tree that's otherwise healthy, your neighbor's insurer is going to go, well, Mr. Smith, he wasn't negligent. There wasn't anything he was supposed to do to protect your property. So, which is why you need to have your own coverage, because your own coverage will and should pay, generally speaking, for the removal of that tree. Now, that's a debris removal coverage, which is only limited to usually $500, maybe $750. But if a tree falls on if your tree falls on your property and doesn't actually cause any property damage, your insurer doesn't actually owe you any money to remove it, even if it's laying all across your property, unless it causes damage to the home or dwelling or additional structure. So people will often call me and go, hey, people say, my road is blocked by a tree of mine. You might get debris removal coverage. You might get to that, but there may be no coverage unless it actually hits the house or hits part of the structure. So there's a lot of information about trees falling.
There's and so if it breaks the driveway, is there?
If it breaks the driveway, then that's different, because that should be connected to your home without any clear space, so it should be part of the dwelling. But if it simply falls and blocks the driveway without causing any damage, there's a good argument under your own policy that your insurer doesn't owe for that, other than what they sometimes will do. They'll pay to get it off the road, but not to dispose of it or cut it up or do any of those kind of things.
Interesting.
Yes.
Interesting about fallen trees. Love that. And so with this, I don't know, now that I'm looking for new insurance and now that I see that Heritage is now on the bandwagon of picking up all these crazy exclusions at the Office of Insurance regulation, which apparently hates its consumers, and just wants to overcharge us and allow bad insurance companies to put in these crappy exclusions and limitations that they never did before. Look at your policy 10 years ago, hell, even 5 years ago. It's great.
And the one big thing I have to bring up when you talk about old policies, which was so fair to people, these days, basically, if you have a leak that goes on for more than, depending on the policy, let's call it 14 days. That was the typical one. If you have a leak that goes for 14 days, the insurer used to pay you nothing on that. There was some litigation that said that the insurer owed for the first 13 days.
Right. Well, and now if you remember, there were some policies that said with knowledge or no matter if you had knowledge or not.
And that's where I'm going is that exclusion used to say what it was is you as an insured were not entitled to recover for damage under your insurance policy if there was a long-term water leak. Now the policies used to say unless concealed within walls, floors, or ceiling. Well, that's fair. I mean, honestly, that's fair. I mean, you got 14 days.
You don't
know it's there. There's no reason to notice that it's there. That is gone. I saw that probably 5-6 years ago, and like one policy was left. I saw that had that left because that was really fair. But now, like American disintegrity, as you'd like to call them,
I do.
They have that clause that says they were the ones with the 14 days and then the 13 days and how all that went.
Right.
But that was one of
the Attorney Imran Malik won that, I believe, in Leon County. If I remember the case where it finally came out in there, where it said that, well, fine, they don't know for anything older than 14 days, but they have to fix what's, a lot of the overlap exists between what happened between days 1 and 13 and then what happened between days 14 and on or whatever it was.
No, it looked very similar. But that was a big one where that exclusion was one of those things, again, where hidden within the walls, floors, or ceilings was fair, right? That's what policies honestly used to be much more fair in the exclusions, the severity of the exclusion, and all the things. We just don't see that anymore.
No, we don't. And what we're seeing are these limitations, and that's what they ended up doing. And now there's a 1% matching policy clause now that is part of the limitations that these insurance companies are doing. They're having a hard time doing, and I think OIR isn't allowing them to put a whole lot of exclusions on there. So what do? They kept poking on that exclusion. They keep getting more and more until they finally hit a roadblock. And they're like, okay, how about we just place a limitation? We're not saying we're not going to cover it. All right, we'll cover it, but About $5,000. That should do it. Maybe $10,000 if they have some water damage around some leaky windows or whatever.
Well, I mean, and there's still in some newer policies now. There's still a chart for the age of your roof, and that's
not legal. They can't do that. They can't do a roof surface ACV in an RCV policy. This is stupid.
And I've seen it. I'm trying to think who it was. It was a Slide or Ken or someone like that more recently. And I was going to go sue on it because the way they worded it, I think forgoing the fact that they may not have a right overall to use it. No. I think there was flaws within how it was actually constructed. Right, but that has a schedule that said once your roof goes over 10 years, you only get half the money. And at 15 years, you get a quarter of the money. And at 20 years, you get 10%. I mean, it actually
they cannot depreciate you on an RCV policy. I mean, and that's what I'm thinking is like, there's a law in the state of Florida in the statute. I forgot what statute number it was.
For an HO3?
Yeah, where you get a RCV and HO3 policy, and there's two things, right? Ordinance and law and RCV, two things that have to be in your HO3 policy. And when we talk about HO3, that's your standard homeowners insurance policy. That's what they call like your quote unquote full coverage policy, because you got your DP3s and your DP6s and things like that. Those are all like rental policies and stuff like that. So homeowner policy, you're living in the home, you typically will have an HO3 policy if that's your primary residence. And so we're learning about HO5 policies today, which I think we're going to circle back to.
We will.
But I have this HO3 policy with Heritage, and I was telling you I was starting to notice that the money value didn't go up a whole lot. So I was kind of excited, but then I started seeing that there were limitations added to my new policy that capped me now, and so limitations are also caps. So if now they're giving me only $5,000 for a sewer backup, $10,000 limitation on water damage, and $10,000 on mold. So if I have water damage that turns into mold, I'm capped at $20,000. And that's for ripping out and replacing. So those are very big concerns for me, and it's a concern for a lot of homeowners. They should be, especially if they're susceptible for sewer backups. Like if you're on a septic tank, I would not accept this policy for sure. Maybe so on city water, but still, I mean, why have this limitation? I'd rather not have it. $10,000 limitation on water damage. Get rid of that. Don't have that, and up your mold policy cap to $50,000. That's my recommendation to you, and to continue shopping. So with that, if you're in the state of Florida and you're listening to the show, you can start shopping, and that's how I am. I'm starting to do it right now. Is I needed some pointed
homes, different sizes and different rates. I mentioned before, I have a client out in Auburndale, which is toward the middle of the state. Nice man, very modest home, and he was going to pay like $7,000. House was like 1,400 square foot, older home, well built, really kind of in the middle of nowhere. And his rates were higher than mine. And we obviously, you and I both live in an urban area, which is or suburban, but still a more urban area.
My neighbors are somewhat urban with their music. I thought I was anyways.
With all the things that go with that, and then I was paying about $5,000. So, and I looked at him, I said, you have to go shop that. I said, you can't pay $7,000 for, in my head, for a house that's a third of the size of mine, in the middle of Auburndale, and a house built in 1950s. And it was just terrible. I felt bad for him. So you really want to shop it, because I know when I was with Farmers, who now has chosen not to write any more coverage. And I got a letter from Slide, right, pursuant to Slide's deal with the Department of Financial Services, and they're like, and I was paying about $5,000 a year with Farmers, and Slide comes in and they're like, don't worry, we got you covered. It's only $14,000 a year.
Wow.
And I was like, really, I think
we got you covered.
And they're like, with the idea, they're like, woo, man, thank goodness we're here. We're here to bail you out of this terrible situation we had, paying a third of the price for better coverage with a better carrier. So you got to be really cautious, because the fact that 2 or 3 insurers might give you a number, like Richie just said, you had a number, 1,300 to 10,000.
10,255 for AAA, and Stillwater is coming in at 1,367.
Insurance, because I have teenagers, because they just don't want the business. That's why they price it so high. They literally, this is some years ago, my kids are older now, but because they literally want to make it where you don't take it. Like if you're taking it, okay.
It's worth it for them.
Worth it for them to finally do it. Right. But literally, people who work for Liberty Mutual couldn't afford Liberty Mutual rates for their kids teenage kids who drove cars.
That's awesome.
But I used them for years and years. They were always a good carrier. I don't sue. I'll tell this. I don't sue them very much.
Right.
So I mean, and that's kind of how I gauge the quality of the carrier.
Right.
Farmers, I didn't sue. Liberty Mutual, I didn't sue. I didn't realize Liberty was actually back in the property market. So
yeah, look at them. And then I don't know. I haven't heard of this one. First Community Insurance Company. I don't know. They're at 4,100. Right underneath People's Trust at 5,500 for crappy managed care program.
Whatever happens, don't buy People's Trust. No. In my opinion. In my trust, the fact that you can own an insurance company and have a requirement of using a repair program that's owned by the insurance company. I mean, really, to their credit.
To their credit, I mean.
As a business, it's very impressive. As a consumer, I would suggest that the last thing you want is the guy who's writing the checks is the one who's determining how much they're going to pay to fix your house.
Right, because they're notoriously cheap. So they're going to do it the cheapest way they possibly can.
And they won't start unless you pay them your deductible. But they are gracious enough to finance your deductible for you.
That's very nice.
But they literally, like most contractors, we all know, you got to pay deductible at the end. When the job is done, you got to pay. Right. Not with Liberty, not with People's Trust. You have to pay it at the beginning, and they'll finance it for you.
And the other problem is they're so far behind. I know a friend of mine, house burnt down, and I just talked to him, and that was about 8 months ago, and they rented a house for a year, and luckily they did. And I was like, oh man, that's 8 months ago. You must be, almost done with the rebuild or whatever. How's the house coming together? Oh, they haven't started yet.
Oh,
I'm like, are you kidding me?
Wow.
Yeah, well, we're getting really close to getting everything like finalized and all that. They were still short on their, estimates and stuff like that. I'm like, oh my God. So that's the whole other problem about not being able to pick your vendor, is that you're at the mercy of whatever their schedule is. And if you're, so again, going back to the Medicare or the DMV line, you're just a number in a DMV line that maybe they'll get to you whenever they get to you. So I don't know if I like that, especially paying a full, big premium for and again, you should expect to get that type of quality service for that type of premium, but in this case you don't. So
yeah.
Anyway, so there's your list of where you can go to on the Office of Insurance Regulation website. If you're shopping for insurance, you want to look at, again, you want to make sure that you don't have exclusions that'll leave you dead in the water, something that you're susceptible for, where you live. If you're susceptible for floods, it's a whole different thing. We're talking about property insurance and shopping the right rates, getting the right policy. You want to make sure you don't have a bunch of limitations, which end up being caps.
Yes.
Seeing what those caps are to see if you can live with them. For me personally, I don't want a limited water damage cap. I don't want to be capped at $10,000 for water damage, because that can be anything. It could have started by wind and lifted up tiles and now have water damage. I could have had like a flood from a pressurized water line, and they're only going to fix $10,000 worth of damage. It could have wiped out my entire kitchen, and then I go from a $50,000 kitchen to a $10,000 kitchen. That's not fair.
What I always say about water damage is people kind of go, oh, how much does water damage cost to really clean up? And what I always tell people is, if you take like this cup it's an 8-ounce cup. If I fill this to the top to 8 ounces and pour it on this table, it's disaster. Like water's everywhere. I mean, look, like you take a cup and your own home, you knock over a cup. You're like, oh my God! And you got the quicker picker upper, and they got ads. You run around trying to get stuff, and it's leaking all over, it's dripping all over the floor. That's 8 ounces of water, man. You have a pressurized line or a line off. Typically, the cheapest lines in the world are the ones on the back of refrigerators. They used to be like this clear plastic stuff.
20-cent line of
like some sort of polyvinyl something.
Right.
But that thing breaks on a Saturday night. If you're out, 5, 6, 7, 8 hours of water spraying all over there. Oh my God. So yeah, when you think about $10,000, you think, well, I could probably clean it for $10,000. I mean, how many fans you have, how many towels you have, and it's not enough. I'm just telling you right now. But yeah, go spill 8 ounces of water on your table, and that'll give you an idea of how bad $10,000 is for a water loss.
That's right. So I would take that into consideration. So look at the limitations, look at the caps, look at the exclusions when you're choosing the right policy for you. And then right before the show, Hans, you mentioned something. I'd love to talk about this a little bit more. I didn't even know that these policies existed before today. And so we're talking about this topic of what we're going to talk about on the show. And we mentioned let's talk about, this is such a thorn in my side right now, is looking for new insurance. It's like a full-time job right now to find better insurance at a good rate with good coverage. So I'm like, it's taken me weeks to find the right, and I still haven't found the right carrier, and I have like another couple weeks and that's it. So I'm getting a little nervous. But you said, well, I taught, and you can explain it. You talked to a friend of yours, right?
I talked to a friend of mine, and I said, I need to get coverage. Farmers is not writing anymore, and I don't want to go with Slide for $14,000 a year. And he said, call a friend of mine. So I called this gentleman, and he goes, hey, he calls me back. He goes, I think I got a line on an HO5. And I'm like, what's an HO5? I've been doing this for 28 years.
Is that like a foot long or something?
I mean, some sort of.
Like a 5 on
and he said, no, it's a model train. And I said, well, I know HO3 is kind of the typical policy, which is essentially an all risk policy, as opposed to like an HO8, which is a named peril policy. We can talk about that today or some other time. But he said, no. It was a little bit like Spinal Tap, the movie, not the actual surgical procedure.
Ouch. All right.
And he goes, no, it's a 5. It's better than a 3. I'm like, because it's 2 louder. Again, for anyone who watched Spinal Tap, that's not bad.
No.
But
I was 6 afraid of 7. 7, 9. Anyway.
I think that's actually a really good joke. Actually,
I
think it's very solid. I think it's very solid. As a kid joke, it's very solid.
It is good. So 5 is better than 3.
So 5 is better than 3. And I was like, well, I've been doing this a long time, and how is it better? And he starts laying out, it has all these enhanced coverages that I never knew. There's enhanced coverages for property, enhanced coverage.
That's crazy.
Enhanced coverage for personal property. A lot of things that come with it. Who
sells these policies? And you got to tell me how expensive it is.
Well, so our discussion was, I always forget, who's out of Daytona? Security First. Security First.
Right.
I think he had Security First quote it for me with an HO5, this enhanced coverage. And it was like $5,500. I mean, it was kind of what I've been paying yet again after the scare of farmers leaving.
That's a really good price, because this is what I went to online. We'll go to Google now. Google Genesis, right? Let's look at an HO5 policy to get the definition. It says an HO5 policy, property insurance policy, also known as comprehensive homeowners insurance policy, is a type of coverage offered in Florida that provides broad and enhanced protection for your home and belongings compared to a standard HO3 policy. Mm-hmm. So it's open peril coverage, meaning that HO3 offers open peril coverage for the dwelling structure. This means you're covered for any damage caused by an event not explicitly excluded in the policy, such as fire, theft, weather events. Mm-hmm. Enhanced personal property coverage. So unlike HO3, which offers named peril coverage for personal belongings.
Right, for personal property, yes.
Yes, so for personal property, HO5 offers open peril coverage for your belongings as well. This provides broader protection against various potential damage sources.
Yeah. So basically, anything that damages your home under coverage A, you can recover under coverage C for personal property. Personal property, which is again known as coverage C, often is a named peril. Only certain perils will allow you to obtain recovery for your damaged personal property. And even under an HO3, which does have replacement costs for personal property, they actually will gerrymander. Well, there's other policy forms that only pay you actual cash value. I had a situation recently with my son. He shipped his computer from college in Boston, and it's all kind of happened kind of quickly. So he goes down, has a nice gaming computer, buys $2,500 worth of insurance coverage from the Postal Service, which is like $500 to ship this computer because it was too big to carry on the plane. He wasn't driving back. So it gets just zorked on the trip. The box shows up. Box is all broken open. There's holes. I mean, it really looks like somebody just literally intentionally just did terrible things to it. So he submits a claim for like $1,900 because we went down. We got the guy to fix it. You know, he had to put new stuff in it. You know, video cards are broken. I mean, it was legitimately damaged by the Postal Service. I mean, it was in nice shape when it went. And so he submits a claim and they write back and they go, basically they don't say this, but I dig through the manual of the United States Postal Service, which is as fun as it sounds. And it's an ACV policy. So the Postal Service.
Oh, snap.
So he bought $2,500 worth of coverage, paid $500, and they're only going to pay him. And they've denied the claim completely so far. I just did the second appeal letter today to submit to it. And I got some problems because they want to know what the original price was. Honestly, it was like 2015. He's been upgrading it. He's had the same things, upgrading it, new video cards, new motherboards, everything. And so he bought coverage thinking, I better insure this for what it would cost to replace it.
Right.
Which is what people do. So I'll tell you this. If you ship anything with the United States Postal Service, they're only going to pay you the actual cash value, which is the market value of the piece, no matter what. So he spent $500. They've denied it. And again, I did the second appeal letter today. But odds are they're not going to pay him anything because he can't prove the true value of it at the time it was shipped. It's a mess. So again, so a bit of an aside, but you will not get replacement cost coverage for the United States Postal Service.
You're going to have to hire an expert and write an affidavit, like a computer expert, to say, like, I think the value is around this.
Right.
Oh my God, that's crazy.
So it is, but so there's an aside, but that's the difference between actual cash value and
replacement cost value. Right. Actual cash value is replacement cost value minus depreciation.
Mm-hmm.
So they're trying to find the value and then depreciate it. That's crazy. That's exactly what they're trying to do, and have you do the work, which is great. So other parts of the HO5 policy, which they say it's generally HO5 policies are offered for homes with a higher replacement cost value, typically $350,000 to $2 million in replacement cost value for your home. So I didn't know that. So have you talked to this agent?
I did. I mean, he called me and he said, I got an HO5. I think I'm going to apply. I want to apply for an HO5. I got a kind of a quote from Security First, but I want to submit an application. It's little. I was texting him before we went on the air to ask for a status. I've not heard back. But I'm
interested to see what that policy looks like.
Yeah, no, I am too. But again, it's something. And again, he said the HO5 was a little more expensive than an HO3, but it was still in the same, literally within a couple $100, within the range of what I view as, unfortunately, we've all become conditioned to pay a lot more for property insurance. Mm-hmm. But it's in that $5 to $5,800, which is where I've been for a bunch of years now.
Right, with farmers.
And then FedNat. I had FedNat, and then FedNat doubled, and then we had farmers for 2 years, and now they're getting out of the state of Florida. And now Security First is offering essentially an enhanced policy for what looks to be the same amount. So I'm waiting to hear back on the application. But HO5, I mean, all of a sudden, it was like a little bit of angel sang, and I went, hey, maybe that's the policy.
Might want to talk to that agent and see what they can do, because as much as I have a love-hate relationship with Security First, they're actually not horrible.
No.
You know, they're actually a pretty good insurance company. So maybe something to look into. So there's your 2 cents there for shopping for your property insurance policy here in the state of Florida. A lot of stuff we threw at you today. Your standard policy is HO3 policy that gives you replacement cost value and ordinance and law per Florida statute. You can sign a waiver for ordinance and law to save some money if you'd like, but we would not recommend that here on this show. No. Want to make sure you're looking at exclusions, and you're looking at limitations, and you're looking at caps when you're shopping for insurance. There's some new insurance companies in the market. There are new ones that are joining, here as property insurers in the state of Florida.
Let me throw one thing out. I was just thinking about the HO4 policy, which is usually a landlord, which is usually a tenant policy. A lot of apartment complexes now will say we're going to sell you $10,000 in liability coverage. And so what they've done is they're shifting their responsibility to pay for liability coverage for the property.
So renter's insurance.
Insurance. So what they're doing is they're making each of the renters purchase $10,000 in liability coverage. The problem is people say, I have an insurance policy. I'm getting like a free insurance policy with my lease. And I tell everyone, I go, that's $10,000 in liability coverage. It doesn't cover any of your stuff at all. So they'll sell you a policy, and they make it sound.
Look at that liability coverage. You're right. Personal liability. It protects you if someone is injured in your rental unit and you are found legally responsible.
So what the landlords are doing now is they're instead of them paying that as part of their cost of doing business, they're making each of the individual tenants buy liability coverage. So if you trip and fall, slip and fall anywhere on that property, essentially your insurance coverage is the coverage they sold you is going to cover you, but it doesn't cover your stuff. So always keep in mind when you see that liability coverage that they're offering you, keep in mind that if the place burns down or has a flood, whatever things that we've talked about, none of your personal property is covered on HO4 at all.
That's good to know. You're exactly right. This says things to remember. Landlord insurance. It's important to note that your landlord's insurance policy typically only covers the building structure itself, not your personal belongings.
Yes.
So by buying renter's policy of insurance, which I always recommend, that covers your contents, personal belongings, things like that. So if you have rugs, you have something on the wall, art, those types of things.
Including, as usual, have additional living expense. If you have to be forced out of your apartment due to, let's say, a flood, without an HO4 policy, you got to go find someone else's couch. You got to find someone. You got to pay for a hotel, whatever you may have to do. So be cautious with the liability coverage the landlord tells you. You need to get a property coverage policy. It's called an HO4.
There you go. And we've learned today that an HO4 policy is a renter's policy of insurance, otherwise known as HO5 policy is an enhanced policy on all peril name policy that's better than an HO3 policy. This is great. And we've learned that HO3 policies are getting stupid expensive here in the state of Florida. So
Yes.
there we go. That's your show for today. Thank you, Hans Kennon, with Kennon Law Group and your new website. Let's give all your new digs, man.
Sure. The new phone number, the office line is 407-464-HANS, H-A-N-S, which is 4267. My cell phone is and will remain 407-782-0258, 407-782-0258. Email is Hans, H-A-N-S, at Kennon, K-E-N-N-O-N, Law Group. As I always recommend, you just take your phone out, put in the word lawyer, put Hans, and you can take either the office line because it's easy, 407-464-HANS, or the cell phone, again, always 407-782-0258. Thanks for having me.
Yeah, better call Saul. Love it. Again, thank you for joining the show as always. Yeah. And if you like what you heard, go back and listen to other shows. Like us, follow us, find us on Facebook. Go over to our YouTube page, click follow us there so you'll see anytime our new episodes get posted. You'll be the first one to not only watch it, but listen to the show there. And thank you to our producer, Joseph.
Yes.
Joe, for always adding the comical relief to the show, man. I appreciate you.
Yeah. Aim to please. All
right, guys. We will see you on the next show here at Contractor Talk with Richie Kidwell. See you guys. We're out.